All right, people. So welcome to our live wealth teaching. For those of you listening to YouTube or by podcast, any of the streams of media that we're using to share with you everything that needs to be shared for tonight. So quick recap on the analytics for today. So on this teaching account that I always teach you from, so balance is 100. Right now I'm at £272 profit between I think now and yesterday with the extra positions and so this is account is 272% up in profit roughly. And let's take a look and dive into the accounts. Let's look at the logistics of it. So whenever we're teaching and we share with you guys, we like to use teaching accounts and make things relatable to everyone because it's nice to be able to know that you can grow a small account into a large account with the right tools and with the right teaching. So not sometimes now with the right money. I mean, if you times 10 everything, you could make serious money times 10. But the key here is that when you're trading and you're looking at different assets and stuff like that, the key always is to think about, and it's part of the lesson tonight, is think about your growth potential, how quickly you can grow. So this account, these are the trades that I called yesterday or today actually. I'm saying yesterday, but in my mind, the market has done a new day. But I think by the end of the week, hopefully, if the price hits the target, then this account will be at like 700 or something, or no, 600 and something, sorry. And that will be 500% made onto, or 5,000% or whatever made. And there's not too much sweat off the back. Now, for you to understand what I've just done here, you need to be a Monday session, okay? You have to be a Monday session. Now, the editing for it is still going on right now. It's not complete yet, so it's taking a bit longer than usual, but it should be on by Friday. So if you've missed that, sorry about that, guys. But you want to definitely crack on and make sure you get yourself on there. So this is my own account because it's usually you don't really see anything. And Alex was telling me I should show them the profits and stuff like that. But sometimes I don't like to be profit centric because if I do and I focus on the money and not the analysis for everyone, I don't want to I want to just show the process as much as I can and then the money will follow. But here's the account anyway. So let's see what it does tomorrow. I'm going to quickly give you guys some advice as to what to do with this, with your, if you're in any of these trades. Now type in the comment, how many of you are in any of the trades that I gave today or yesterday? So USD CHF, it stopped me out at break even. So that's all right. You should have all been at break even. So you shouldn't have lost anything. If you took some profit because it did get near equilibrium or something, you might have closed, but I didn't. I was just holding on to it. But if any of you are in it, um, let me know. Anybody in any of these trades, pound CAD, CAD CHF at all? Even if you're not, I'm gonna do the breakdown as quickly as possible. Profit yesterday and profit in. Oh, okay, perfect. You took the profit. Wonderful, Manon. Congratulations, bro. If you'd like to, please share your profits, even if it's small. I think it's an encouragement to everybody to see the profits, okay? And you know, we as the leaders, of course, we'll be integrous to show our results as well, because results doesn't do matter, and we want to make sure we show that because that's important as well. But yeah, so saying that, we um, we're gonna make sure that we crack on and make sure we turn the pounds into hundreds of pounds and thousands of pounds. Once the CHF has complete, I'll send it. Oh, what CAD CHF? Okay, profit from yesterday. Okay, no problem. But well done for the profits you've captured. I love that. All right. Hope the rest of you guys, as you catch along and you keep on going, you catch more profits. But yeah, this is my account, guys. Anyway, or one of my accounts here for you to see, the one I always teach on. 277 profit, 277 pounds. So that's good percentage in profit. So yeah, we got good 277% return. So 2.7x. So we've got 2.7x our money between or for today actually, because I took all of these trades today. So let me give you the advice because this is the important part and it's very crucial, especially coming into a Friday. So I want to close this for a moment so that we can have a look at this. Now, this channel is just so that we can see retail trading patterns. We're not really trading the channel like that. So when you see Alex using the channel, it's for graphical measures only, or if we want to see where the market is going to manipulate retail traders. And as you can see, it's done the stuff that we need, the stop hunt and all of the rest of the stuff. Now, if you guys looked at my analysis, how many of you guys have seen the analysis? I know Marlon has, because we had a question about it, but um, I know that Marlon, uh, he uh, he asked me a question about pound CAD. I'm gonna quickly run through that. It's not advanced, but it's just pair correlation analysis for us to look at the price action and see what's going on there. All right, so some of the leaders are on. Welcome T, the main man, amazing man, and Matthew as well. Welcome guys. Good to have some of my leaders on, my brothers. Love you guys, man. Good to have you on. But yeah, so when we're looking at the price action here for pound CAD, so we looked at how the retail traders could possibly be manipulated, and it's worked quite well. The reason why we're in pound CAD short, if you remember, guys, is a D1 VP. Now, I'm not taking the reason why we didn't go long, just to recap before I tell you the instructions of what to do on this account. The reason why was gonna aim for the first low is because when the price did a stop hunt, it didn't there was no liquidity for the price to use. So the price going long now, you can see that the long happened, but it really struggled to take off because there is no liquidity here. The price didn't even enter back onto the other side of the price cap. So T1 still remains the same. We're aiming for the price to enter into the low. However, when I'm looking back at the price action, if you look at the analysis I gave, and I'll do it one more time on live on TradingView, I have the feeling that the price may actually, there's two options now. The price may actually come for the low of the previous week right here and give us a stop hunt of that low and then push for the long for the RTO before we get the massive sell. Remember, we are in for the sell. This isn't the final sell. Well, I hope it isn't anyway. And I won't be able to tell, but I do think that the way that the strength of the Canadian dollar is increasing quite drastically, I do think that the price is going to break below and actually take this low just above where this validation point is. Okay, so I'm thinking to hold on to it. I think the price will smash past T1 definitely by tomorrow. Now, it all depends on tomorrow. We might wake up and the price has reversed. Okay, but I'm just going to quickly break down Monday's lesson to explain why the percentage gain on this is so high. Now, my risk on this account, if I got stopped out, I'll be stopped out in profit and not in a loss because we're using dynamic risk management. There's only one thing here because we're swinging this into the next day that's important. So I'll explain. So I use the M1 to do this, and I guess I think let me open up another chart, one that doesn't have writing. All right, so I'll stay on the M15 here. So all I've done, guys, to explain this quickly, the trade. So if I zoom in just here, so we have a D1 validation point. Here's the D1 validation point. I think I can't get the line from here. So the D1 validation point is just slightly higher than where we are. It's around about here. If I got it right, yeah, that's where it is. So on this D1 VP, the reaction is not the best, but it's still the price kind of reacted around here to give us this here. Oh no, I think I know why it doesn't make sense. My eyes are telling me it's the wrong validation point. It is. It's over here. There we go. So we had the D1 validation point reaction from this D1 VP. You can see that the price spiked to the validation point to the T right here. And it's also close to a round number. Now, I haven't done round levels. I'm going to leave that to T to teach you that because he's the best at it. Okay. He has the deepest knowledge out of all of us by far about all of these things. So round numbers he will teach about. Okay, but this round number here, very close, 1.76, call it 1.76000. We've had a stop hunt here of the previous day onto the D1 VP. And then we have this low hanging here, which I believe the price is going to go for. That's why my take profit is beneath here. Now, this may not actually happen even on Friday, but depending on how the price behaves on Friday, I might swing this into the next week, or I may close and re-enter. Simply because on Sunday, the price may open with a massive spike in the opposite direction, stop you out, and then after going the way that you want. So it depends how it is. But this is the VP that we're using at the moment to go short from. When I go to the H4, sorry guys, I hate when that happens. I mean to press this and yeah, so H4. If we look at the price action here, so even if we were to use a H4 stop hunt, we had a good one here into this H4 supply zone. So either way that you swing it is quite good, this trade. And then we've kind of got these equal lows. Now I told you about this double bottom. Okay, when the double bottoms are here, we know that there's going to be a lot of liquidity here, that or retail traders especially, because that's one of their favorite patterns for reversal. And the price has kind of taken off long, and it should stop them all out tomorrow. And that will be target number one. Now, if you want to, you can close out at target number 1 and then just come back and re-enter for target number 2, depending on how today goes. Now, if you have a really good entry at the top and you see that the price is breaking beneath, you can lock in some profit. And I'll explain it all in a moment. So let me just close this for a moment so I have some more space. So, uh, so I didn't, when I was teaching you guys on Monday, I was using H1 as a starting point because it's a stable area. Okay, but you can use lower time frame order blocks. For example, uh, I use the 1 minute time frame to do this. And with the 1 minute time frame, because the price is fractal, as I was saying, you can see that my entries are still very accurate. Now, what I'm going to do, guys, as a prerequisite, if you have any trade orders that are above this point here, so any trade orders that are below this point, especially 1.75454 for 1.75453, I would suggest, guys, that you should make sure that you either close out and wait till you get in tomorrow, because the only fear that I have, and I see markets is, well, every broker is notorious for this, it's not their fault. When it gets to 10 o'clock, the liquidity is low for the first hour, and so the spread increases in accordance with that for the first hour, and then it goes back to normal. But that first hour can be detrimental. So you can be in profit and the price spread widens by 20 pips and stops you out in profit. So that's the only thing with dynamic risk management that you have to pay attention to. Okay. So from Monday's lesson, what I may do just for until it hits 10 is that my stop loss here, I'm going to put it back to break even. I mean, this one is safe. Okay. But I would say anything after that, I think I'm going to put them back to even just to put a bit of safety there, just in case. So if the spread widens, it wouldn't stop me out. I might even actually put this back here. I don't mind risking it because I'm in profit in other trades, so it's okay. So you can see with the entries, guys, the accuracy is the same. We're still going for the sharp entries. All right, I can describe why I took this trade here. So if you look at this area here, this demand zone right here is still a price cap. So on the M1, we had the price cap here. The price spiked into this area, pushed further long, and then it went short. When it shorted, it broke beneath. But the reason why I didn't take it on the first entry here is because it spiked to the first demand zone, but it didn't enter into the price cap zone. So I knew that when the price shorts here is going to come back one more time, which is kind of near where the entry is basically. And you can see from here is a straight drop and it never came back. So it just goes to show you that on any time frame, the price does the same thing. Okay, and when we do price caging in the future, there's a nice easy way for you to be able to capture these M1 movements starting from even the hourly. You're just going to have to cage the price. And as you practice, your eyes will get better at looking at the price. So this is where we are. Depending on how I see the price behaving, this trade here, I might actually close it and take the profit just in case the price wants to increase the spread, because that's the only notorious thing. What I'm hoping for anyway, some of my M1 projections. Okay, this is a nice strong demand zone here that the price has been using. Let me see if there's any activity here. Well, if I just use the body, you can see that we have a flip zone kind of scenario here. Hopefully the price doesn't break above it. And probably even, let's just hope that when it gets to 10 o'clock, the market is not mean and the spread doesn't widen too much and the price doesn't really spike everywhere. That would be fantastic. If it just stays stable, we can just continue swinging as normal. That would be fantastic. Okay, but pound CAD from where it is, as you can see, guys, this is what I was teaching on Monday. So first entry here at the RTO, I'm still a bit late because I had an entry. For those of you who saw the recording of me breaking down the rate decision, that I had an entry up here, right here. But then I put my stops to break even. I shouldn't have done that. Should have just left it alone. But then you can see, if you're not reading that mini ebook that I made, which is about the session times, then please do, because you can see here we have another situation. 7 o'clock, the price spikes into this area here, 7:30. So just as Asia is, ending, we get the return for another RTO, and then the price starts to sell off. And then one more time, you see right here, just before 3 o'clock, we have another spike for an entry here. So about 145. So if I map this out for you, here's 12 o'clock. When we get to 1 o'clock right here, the liquidity gets strong, and in the US session, we get one more entry. And that's the entry I took right here. Now, from what it looks like, the entry looks weird. I would have expected the price to go back up to this supply zone, but I took it based on the fact that there's accumulation here. So on the algo side of things, or the algorithm side of things, there's a lot. If the volume generation is here, then there's a lot of orders here. Probably they're trying to stop people from going long, especially from 12. So when that happens, I thought, okay, I'm going to sell from here. That's why I gave you guys the trade call. and then the rest is history. So these are the trades that I'm in right now, and hopefully the price doesn't reverse. Near the end of the day, this is the only thing that I don't like when the price does this. I just wish it would continue selling and leave us alone because I don't like the pressure. Okay, but what I'm banking on is this line here. I think this is the previous day's low from my memory. Okay, it's close by. It's not exactly the previous day's low, but hopefully if today closes below the previous day, then this low will become a validation point, a D1 validation point. So we should expect activity around here. So I don't expect the price to go too far away. I'll put my stop loss here, and I'm using the M30 now, because if you look at it carefully, you'll see that this demand zone, which triggered this long in the first place, where all the entries came from for the short, the price has finally broken beneath, returned to the other side, and now it's selling. So this is my kind of safe zone. There are M30 equal highs here, so I guess the only thing that might happen is the price might spike a little bit and come back into here. But apart from that, from this technical side of things, I think we're good to go. So I'm going to leave this line here. I guess the worst the price can do is to come back here. If it does that, then that's all right. I think we'll be able to survive. As long as the spread doesn't go crazy, then that's the only thing, because I don't really want to be trying to battle with the price. Okay. And if it gets too techie, I might just close this first entry and wait for a higher up one and just leave these three to do what they need to do. Okay. So hopefully we get this. This is my area. I'm using the M5 again to cage the price. So within this M30 demand area, then this is it. Either that zone is going to be used, or the price might spike up and use the one above. Sorry about that. The price might spike up and do the one above, and we can go from here and look at it. So this is my plan of the trades. This is the limit that I have. If the price spikes here, then that's the limit I'll go for. If I want to, I might just keep this stop loss here because, I can do that. And this is only temporal. So in this case, I'm putting myself at risk of kind of taking a loss still because with this entry here. So, but we'll see. All right. I might change my mind halfway through the lesson and change it on the other laptop while I'm teaching. Who knows? But I'm just going to leave it alone. What I'll do is set an alarm here. Put an alarm right here just to tell me what's going on with the price. But it should be all right. Okay. Should be all right. So now what do we do with pound CAD? If you're in the trade and you're above, I would say, let's take it even higher. If you're near my third entry, so 1.7580, I think you'd be all right to drag your stops. I don't expect the price to give a 25 pip spread widening. Maybe 10 pips, but not 25, so that should be okay. Now, if we get stopped out of all of these by some crazy spread, when it gets to 11 or something, I know it's outside of pound CAD's liquidity time, but if the spread comes down, we can get in again. But we'll just be watching this, guys, because I think pound CAD has good potential. So let me switch over to the other screen, and then we'll do the wealth session. So I'm going to pull it up on here. Let me get trading view on. So if you haven't watched the video, I would suggest you do, please do so. Let me see if you guys can see. Hopefully you should be able to see my screen. Can you guys all see my screen? Right now I have trading view on. Can you guys see that? If I get one yes, okay. If I've got one yes, then I think everybody can see it. All right. So let's look at this. Let's look at what I was talking about. So right here, we have two charts. Now, the reason why I'm using gold, all right, is gold's intrinsic properties, as I've been teaching about the gold standard system, and it leads into the lesson I'm going to continue from last week about finding assets. Gold, one of the best things about it is that intrinsically its supply and demand is what I call true supply and demand, because it's based on something that exists in the earth in a finite quantity. So the price of gold, the value that it has is a very stable, if you want to call it marker or stable comparison tool that we can use to compare the strength of different currencies. Okay, because fiat currency, as we know, is based on fiat, is based on promises and percentages and central bank regulations, so to speak. But with gold is not the same. Gold's intrinsic value is actually by true supply and demand. So if you want to compare the strength intraday, intra-week between currencies, you can compare the two. Now, TradingView has a very good system here where you can actually compare two currencies between each other. So if you're looking at the pound, now the reason why I'm on the daily is because I'm looking at the intraday view. Okay. If you want to look at intra-week view, you can use the weekly. And if you want to look at the overall view, you can use the monthly to do so, and etc. So you can use this as a very simple tool that can help you to understand the differences between prices, or the differences between strength of a currency. So as we can see here, all right, if I show you guys how it looks, so if you want to know which one's which, if I click on the blue line, this is gold versus the Canadian dollar, all right? And also we have the pound, the gold versus the pound. And as you can see, for the last, seemingly for the last, period of time, especially getting into August, going forward, all right, gold has, of course, increased in strength because the prices of them have generally gone down. However, what we do see is, as I had it here, now it's 10.69 at the moment, but the percentage of how much gold has been moved by the Canadian dollar. So the Canadian dollar has, moved against gold by 10%. And we have gold, the pound, which has moved against gold by 7%. If the numbers were minus, then gold is moved against them. But in this case, the currencies are in positive, so the currencies are moved against gold. So we can see that the Canadian dollar has more strength behind it than we have with the pound, by about 3%. Now, this 3% is massive. I mean, if you were to look at this from, now, I don't use moving averages or anything, but for those of you who've ever used a moving average, the further these two lines away as separating they are from each other in the sense, okay, the bigger the gap is, the difference in strength becomes greater, greater in its not just visual representation, but what you see on the chart. So when we look at pound CAD, if you want to add extra confidence, now I did this teaching in October last year. If you go to October 2020 series of videos, it's there. But this teaching, I did 2 parts on it, but this is something we can add to confidence. Now I don't add it in the live analysis sessions because I think technicals, you can use those to have a very good picture. But in cases like these, if you want to extend your target, you can also use this, okay? And other measures to help you to be able to work out what's going on. Okay, because we're still dealing with currencies, even though it's candlesticks, they're based on currency strength, which is based on, a whole load of things. All right, but this is a very good tool to use. If we look at it, however, in any other time frame, if I go to the H4, okay, all right, you can see that the strengths are kind of panning out, but the gap between them is starting to widen, especially when we get from January going forward, okay? And this is clear because as the world is opening up, we're seeing more of these kind of situations of, um, the strength of the Canadian growing. And both of these have fundamentals around them, which are both positive, price positive. With the GDP, we're the first, I believe, European country to have the vaccine and being, to be distributed in that degree or that amount of vaccines. But then with the Canadian dollar, because it's a more world issue, okay, because Canada is a commodity currency, and the commodity that is back, or the commodity that it is now, I'm going to write this out here to introduce the lesson before we go forward. So let me write this here. Okay. So just a quick recap. So we have 2 types of currencies, or you can have, we have commodity currencies. All right. And the second type we have is, put this here. Now I'm really starting to like TradingView a lot. I can't even lie to you. I just wish if they get some API settings for the brokers we use, I think I may use TradingView to enter sometimes because it is nice. I have to give it to them. And if they get an app, even if it costs money, I'll pay for it because it's actually really, really good. Very visually stimulating when you're looking at the price to help you look at things. So we have commodity currencies and consumer currencies, okay? So if I make some more space. So under the commodity currency, let's talk about the main ones that we deal with. So commodity currencies, we have, I'll start with the Canadian dollar. They do have an app. Okay. You just brought me in. All right. If you don't mind, bro, please send out the link for the app. Let's get cracking with that because I think TradingView is really, I think they've sold me now. I think I'm sold. I actually am sold. I love it so much the way it is. If you can find the app link or something or how we can get that, let's take that advantage of that. All right. Now, the question I asked you last time, guys, was if you guys remember the reason why Marlon won the challenge. actually both challenges, but the first one anyway was to do with the Australian dollar. Okay, and I put some right here, New Zealand dollar here. Mm. Now the pound is also one, is a shocking one because you expect it to be in the other group, but it is there to some degree. Now, commodity currencies, what they are in short, is where a currency's exports or the strength of a currency is heavily dependent on a major export, which is usually a commodity. Okay, so for the Canadian dollar is oil. Okay, so in other words, oil prices, the situation around the world with COVID-19 and the recoveries that are taking place will always be price positive for the Canadian dollar because they have a major share in the market cap of, oil. Okay, so if oil prices go up, the demand for oil goes up, then the Canadian dollar itself will gain value, okay, to it. If we go for the Australian dollar, it would be gold, okay. If we go for the New Zealand dollar, this will be an interesting one, meat, okay. Now, for those of you, if you go to Iceland, for those of you in the UK or many other countries around the world, you notice that your leg of lamb a lot of the time comes from New Zealand, okay. There's a massive meat market in New Zealand because of, their amazing agriculture down there. So you can find with prices when it comes, excuse me, to meat prices, you can actually trade those. Anything that's an asset or considered an asset can be traded if it's listed, guys. So you can even trade meat. I think there's even meat futures or countries that or companies that deal with meat. You can trade those things like that. All right. Now with the pound, all right, is natural gas. Okay. We do have the resources of natural gas, even though it's heavily owned by China now. But we have natural gas, from the North Sea. Okay. So these are the commodity currencies. So their exports, okay, heavily affect the currency. Whereas with especially the US dollar, because of this position it has, in the grand scheme of the world economy as the world reserve currency of the world, is definitely a consumer currency. And reason being, as we know, 1974, when after President Nixon did the unforgivable crime for all economists, okay, which is to take the US dollar off the gold standard system that was in place, or the gold convertibility system. One of the things he done to make sure that he kept the US dollar in demand is to create what we call a petrodollar system. So in order for you to, thank you, Marlon, bro, I see that. In order to get oil, um, you need to you need to buy a lot of commodities, but especially oil. Every country around the world at the moment, if you want to buy oil, you need to buy it in US denominated currency. Okay, that's the only way you're going to get oil. Okay, for the meantime. Now, there are ways around it. China and Russia, you know, as countries that they are, want to kind of break out of that system. And even for them, is highly limited. But if you want to get oil, okay, some of the biggest exporters of oil, like Saudi Aramco, you have to pay in dollars. Okay, so that gives the US dollar a unique supply and demand. Okay, and so this is why sometimes in economy, the US dollar is called the petrodollar. Okay, so it's a consumer currency for that reason. Another one is the Swiss franc. Okay, now this, we already know about Swiss banking is is the best in the world for many reasons. It's got privacy, security, tax havens, and etc. So the Swiss franc is really a very good currency for because consuming, especially because the Swiss franc is in the Eurozone. It's not part of the EU. I don't believe, or they haven't joined. But to me, last time I checked, they're not part of the EU. Okay, but they have a very strong business relationship. Now, in the course, guys, I talk about the situation with Euro CHF. I was saying it this afternoon. If you look at every Swiss franc chart, in 2016, around January 15th, something like that, there's a massive bearish candle on every single Swiss franc pair. Okay. The history to that is based really on what happened with the relationship between the euro and the Swiss franc. So you get a good picture as to what happened. So it's another type of currency, which is a consumer currency for buying things and for purchasing, okay, or for importing, is going to be the euro itself. Okay, for many reasons, it has a massive spread among many countries and kind of gives that kind of local or economy, kind of like not global, but a massive spread in the economy, a whole continent. So these are the things. So you can see the difference here. So in other words, with the euro, you couldn't pinpoint what export they have that really drives the price up and down of the euro. So it's deeply fiat, if you want to put it that way. It's not backed by anything apart from figures and numbers and management of printed money or printed currency. Swiss franc, something's very similar to this, the same kind of picture there. Okay. And of course, the US dollar being the world standard reserve currency, you know that is used for commodity in, you know, the acquisition of commodities, but, you know, it's not back. I mean, I wouldn't say it's backed by the dollar, but I just feel like the dollar keeps the is kept alive by oil. Okay, so this is the difference. So for me, when I look at the overarching theme that we have, because the world needs oil as a must, okay, more than it needs mm, um, and a lot of other things, okay, we can see why the Canadian dollar is gaining strength, and I believe is going to gain even more strength as we go along. Now, if you saw my EuroCAD analysis, guys, there's a liquidity gap on EuroCAD back all the way back from 10 years ago, which is at 1.25 something. And currently, I think EuroCAD is about 1.49 or 1.50. So 2,500 pips away, there's a liquidity gap. And because the bias is bearish, the C swing that has just happened, we should see some crazy strength on the Canadian dollar going forward, you know, as the world opens up, you know, if you think about it logically and fundamentally, this is what we have. So leaning off of gold, I want to do one more thing, guys. I'm going to do quickly the rate breakdown, and then after I'm going to go to this. And these are all things that are important. So I'm going to do this here. Bank of Canada. All right. So if I go to the Bank of Canada, let's do some searching here. I really want to do one more part of the rate breakdown just to help you understand the pound CAD trade, and then we'll move on to the other part of the lesson. Well, you guys all good so far? Are there any questions at all? Oh, you're good. Okay, I guess we're all good. So I'll continue. Good. All right. So when we look at the Bank of Canada, let's have a look back again at what we were looking for, what I was talking about, but let's grab this. So let me see if I can get this here. So publications should be, let me scroll down. All right, so here's the rate statement, okay? Here's the rate statement. Let's have a look. See what we got going along. Okay, so there is a PDF version, but we're going to do a written version. So just to recap, I'm not going to do a deep rate discussion about this because I made a video about this already. But what I just wanted to highlight here, which is the key point, is this line right here. So I'm going to read it to you. So the global economies, okay, the global economy is recovering from the economic effects of COVID-19, albeit with unevenness across regions and sectors. The US economy recovery appears to be gaining momentum as virus infections decline, and physical support, this is the key here, physical support boosts incomes and consumption. So fiscal support is a very nice way of saying that they've printed more money from the Federal Reserve machine. That's all it means. So they've just devalued the US dollar again in currency. Of course, they would never say that to us, but that's exactly happened. They've created dollars that don't exist, and they've put it into the system. So whenever that happens in a situation, as I talk about, when fiscal policy and central bank policy become one, well, there is some sort of financial crisis. So this fiscal stimulus, okay, which is the government regulations to print more money. So in other words, the government has asked the Federal Reserve to print out more banknotes for them, okay, and that means that we're going to have more US bonds coming out. And I saw the US dollar bond yields. I think they've increased in value right now. I think they're like, I'll find out what is the 10-year bond yield returns, but I'll go through that probably later in the session or another day tomorrow. But what we see here is that because of this boost in incomes and they've printed more money into the system, the consumption of oil, whenever there's more money printed in the system, we know that it's going to be a short-term fix, okay, for a long-standing problem. Okay, this system is already inherently broken because you can't create money out of thin air without having something backing it, okay, to represent that money. The currency is just a representation of the value. So saying that, whenever there's a boost of income and the private sector gets they put more liquidity there, the public sector, there's more consumption. The key is more consumption. So this consumption means more oil. Now the US and Canada share a border across many different states in the US. Okay, so it's very easy to get oil into the country. So this basically inflated system that if they put more money into the system, all these non-existent dollars are going to be pumped into Canada, which is going to boost their economy and boost the strength of the Canadian dollar massively until the house of cards falls again in the next 10-year cycle or whatever happens. Okay, so this new fiscal stimulus will increase US consumption and output growth. Okay, further. Yeah. So after that, when we look at the price, it says that global yield curves have steepened, largely reflecting the improved US growth outlook, which is good. All right, but the global financial conditions remain highly accommodative, and oil and other commodity prices have risen. The Canadian dollar has been relatively stable against the US dollar, but has appreciated against most other currencies. So as they're giving us an insight, whenever you hear them say this, what they're trying to say is that the Canadian dollar is strong and is going to get much stronger. Okay, so when we look at this rate, it's only 5 paragraphs, but in here there's a lot of information that we can use. Okay, now the second paragraph and last one I'm going to go through, and I promise that, and then we'll go through finding assets, is CPI inflation. Okay, so okay, core price inflation is near the bottom between the bottom of the 1 to 3% target, so probably 1.5. I don't know the figures off the top of my head. We can check on FX Street target band, and is likely to be more temporarily to, I say, the top band. Okay, so they're saying that inflation will increase, and this simply is because of this first line here. They're printing out more money, so there is going to be inflation. They're printing out more money. They're still doing quantitative easing. Let me see if I can find the line here, right at the top here. So they've got reinforced and supplemented, forward guidance to increase their quantitative easing program. So more money into the system. All right, so the expected rise in CPI inflation reflects the base year effects of deep price declines in some goods and services at the outset of the crisis, which is true. Okay. Now, the lower this inflation is actually good. If you think of it this way, for those of you who are from the UK, for me, okay, I would say when 10 years ago, okay, maybe even more than that, let's say 16 years ago, okay, when I was 10 years old, a Snickers bar cost about, I think, 30p. And now I think a Snickers bar, when I go to the shop, I don't eat Snickers. I'm a gym rat. You already know that, guys. So 89, I think it's 89p a bar, 79p. So even though the inflation, they skew it in the government, but basically the price of goods, because of the system that we have that's inherently broken, the cost of goods and services over time will always go up. And so, but they're saying because of the coronavirus period and the demand was low and stuff like that, the prices were dropping. Okay. When the demand is high, the prices go up. So when the demand is low, it will drop. And of course, it's going to increase as things open up and people use more services. Okay. Now, in this case, combined with higher gasoline prices, has pushed up, the run up in recent oil prices. And CPI inflation is expected to moderate as the base year effects dissipate. And excess capacity continues to exert downward pressure. Okay. And measures of core inflation currently range here. So I said 1.4, but yeah, 1.3 to 2%. Okay. So this is what we're going to look at. Now, the rest of what this is just it's not jargon, but it's the same things they always say. They're trying to stick to 2% inflation, but that's just another story for another day. I don't want to go through that because it does make me angry to hear, but I'll explain why. All right. So this is my outlook when we look at the Canadian dollar. So I'm expecting the increased strength. I don't know on the weekly. I didn't look at it intra-week. Intra-week, I think the pound is still stronger by a bit, but I think this will definitely pan out, and we'll see that I believe the Canadian dollar will gain strength over time. Okay, and probably either match the pound or increase. We'll see. All right, but this is my outlook. Let's look on the monthly and see the range here. Same thing. So on the higher time frame of things, it looks like as though the pound is um, still a lot stronger than what we have here. This is why I'm using the intraday, because on the intraday we can see the picture short term. This is why my target for that low, I'm not gonna, you know, Now, sometimes when you zoom out and zoom in, sometimes it changes the percentages because of the thingy here, but the first percentage you have on there, that's the percentage, okay? Sometimes the price does things that make it look strange. So if I do like this, all of a sudden now the pound is actually, you can see it here, the numbers change drastically, and now it's minus, okay? But even whichever way you put it, even if it's minus 13%, okay, and the gold has moved, uh, against the Canadian dollar, the more of a minus it is, the worse it is. So either way, it says the same thing, but we have a bit more strength intraday, basically. So I'm going to hold this until Friday in short. All right. So if you're holding with me, guys, enjoy the ride. Let's see what we can grab from this. If you maximize using what I taught on Monday, well done. If you haven't, there's no hard feelings there. We're practicing. All right. So let's crack on with the lesson now. Let's talk about, yeah, yeah. Savers Are Losers by Robert Kiyosaki. Definitely. This is why savers are losers, because of all of these things about interest rates and stuff like that. And this is why we want to find assets for ourselves to beat that. Really, as I was saying with the strategy. Now, what I'm going to do to kick off the lesson, finding assets, I'm going to stay on TradingView today. Something different. Usually I switch between, but I'm going to stick on TradingView. Let's have a quick recap of what I was talking about. So I'm going to pull up Barrick Gold again. So Barrick Gold, our conversation there was really good. I'll leave this here. It's all right. We can pull something up. So when we're talking about gold and we're looking at price action, so let me copy and paste this, grab this here. Now, with the like-for-like strategy I was talking about, it's a very simple strategy that we can use to get ourselves in a position where we can actually get the assets, okay? And I'll explain what I mean. So let's let this load 1 second. I think one really cool thing about TradingView, now this is not advertising for TradingView, but I think one really cool thing I do like about them, I think if you leave notes on a certain uh, whatever chart you were looking at, for some reason it comes back and actually gives you the chart again. So, which is fantastic. So let's let this load up. I guess the only downside, well, on this laptop anyway, it takes a bit of a time to load, but nonetheless, it's all right. So I think what I can do, can I open up new charts or, okay, no, we'll leave that here. Let that load. And I'm going to pull up gold here. Put this here. So what we want to look at, guys, is with our like-for-like strategy, as we're talking about now, when we're assessing what asset we're going to get, we need to look at the barriers of entry. This is what I want to deal with, because I think one of the biggest hindrances sometimes is, of course, the barrier to entry in terms of pricing or how much money you have. So to overcome that, we talked about the like-for-like strategy, which is something that I personally do, and it works very well. I think I have too many of these open. All right, it's taking quite a while to load. Yeah. So let's do that. Let's see if we can grab this. All right, you know what? Whilst we have a chart that's actually loaded, let's just start from here. I'll just find Barrick Gold on here whilst we're waiting for these guys to catch up. So Barrick Gold. So Barrick Gold is one of the largest gold companies. We can actually use the gold versus the pound chart, okay, to see what's going on, but we need candlesticks. So I'm going to delete this for now. Remove that. And let's get some candlesticks going. Not hollow ones. We need the thick ones. All right. So let's just look on the large time frame, just the bias of things. So from a large time frame perspective, I spoke about Barrick Gold when it was at 15, I think. Yeah, I did. I talked about it when the price spiked here. So it returned to a price cap entry here. Now, one thing about technical analysis, guys, once you understand the algorithms of the market work very similar because it's based on the money of the market. So the things we teach you, the things Tokes will teach you, the things Alexandra will teach you in the future, Matthew and Shazad will share, okay, is based around how the price behaves, algorithmically. And for those of you on YouTube who are not a part, if you've jumped on a free course, you should have a taster of as to what I'm talking about to some degree. But we can see here that this price return in here was simply a price cap break, and the price returned in this week. And now we had the price break and a return in the previous week, sorry, 2020. And here's what I was talking about, the return back to the other side. So we had the return to the demand zone, and now the price is going long. Sorry, not here. This is 2020. I mean 2021. We had the return to the other side and the long. Now we have a nice little liquidity gap here at $38. So I can already see from here that at least $38 into this supply zone, we're going to get a long. We have a nice ABCD swing to go long. And I think that Barrick Gold is definitely going to gain. All right. Now, when we're talking about it, you see, I've opened up Barrick Gold and it has all of my notes here. How can you not love this thing? So amazing. All right. Now, I'm zoomed out here, so it looks a bit strange, but Barrick Gold as a company. So one of the things with the like-for-like strategy, as we're talking about, before I review these 5 points, is when you're looking at gold, gold, the barrier to entry is quite high. Okay. Let's just be honest. For most, the entry, the barrier for entry is quite high, uncomfortably high. I mean, okay, that's my alarm. There's a trade alarm. Let me just turn that off. Sorry, guys, if you heard that. All right. So the barrier to entry for gold is quite high. I mean, if you were to look at gold coins, I'm going to show you the website that I use, by the way. So www.gold.co.uk. So this is what I look at every single day. It's not the only place I go to, but just to explain. Now, if you're starting out as a young person, or no matter what age, a young man, let's just say a young man, you're 18 years old and you want to get into some investing. All right. Now you can see here, apart from the bullion stuff that I talked about, let's say that we could get gold coins, which can't be taxed because you can't tax money. And because gold coins are classed as money, we have the CGT exempt thing, especially with silver coins, as I've shown you already. But even with gold coins, okay, there isn't some taxes. You pay a high premium, okay, which is another barrier because the premiums can go anywhere. Sometimes some of the, more evil bullion brokers, if you want to call them that, are quite mean. So if you look at gold right here, let's look at some prices. Let's make it a bit more practical. So you can see some gold Britannias, okay, from £1,206. All right, view this here. Pull this up for you guys. All right. So you can see gold Britannias, okay, 1 troy ounce of gold is from 1,388, okay, and you can see that these are really never sold out. The reason being is because the barrier to entry is high, but however, you do get the benefits, even though there's the premium there of not having to pay tax on the gold coins. So you can see it here, they're CGT exempt and they're also VAT free to protect, perfect for investors looking to make the most on their money. All right. So right here, if we did a calculation, let's say we wanted to get 1 gold ounce or 1 troy ounce of gold of a gold Britannia. Okay, this is the 2021 edition, which is really quite nice. I love the way it looks. Okay. Now, for one of these coins, okay, 1,332. So I really want to make it practical for you guys so you can take something home. Now, I know as a Forex trader, I should know the exchange rate, but can somebody tell me what £1 $1 equals to in pounds, please, or pence? It should be, I guess. Let's do a bit of a calculation here. I'm gonna do some maths. Grab this out. Now, those of you who are from other countries, you can, make it work for you. So, US dollar, whichever currency you'd like to buy in, okay, you can choose which one you would like to go for. So we have 1 gold coin. We're not even going to gold bars yet. Let's just say that we're trying to avoid this, the capital gains tax. So 1 gold coin, which is 1 troy ounce. 1 troy ounce in pounds equals to 1,000. How much was it? 206. Okay. Okay, £1 equals to 100. Okay, thank you very much, T. £1 equals to $1.40. So I guess $1 would equal to 60p. Okay, roughly. So I think it was 1206. Am I right? Or 1332. Come on, Mike. See, memory has to get better. So let's just say 1332 equals to 1 ounce of a gold coin. All right. Now, for this 1 ounce of gold coin, let's think about how much Barrick Gold we can earn. Now, remember, when you're assessing a company, when it comes to especially assets of gold and silver, for other assets, the picture is different, and I'll teach on that. But as a recap from last lesson, remember, guys, that when we're looking at these kind of assets in this regards to, let's say, Let me put this here for you. Um, 1 second. Yeah. So in regards to other assets, sorry guys, we're going to fix the mouse. If we go for Barrick Gold, so if Barrick Gold is $20 for us in the UK now, from you around the world, you can do what you like. So $20. All right. Um, my alarm is going off for trading, guys. So be prepared. Make sure your stops are at even if you're in pound CAD. All right. The spread is starting to get a bit wider. Okay. Keep your eyes on that area. And yeah, let's continue. So I'll say roughly, let's just say, according to this, the pound is about 40% stronger than the US dollar. Okay. So we're talking about 12, I think £12 maybe. Okay. £12 for one share. All right. So let's do some maths. Can somebody please help me out? For 1,322, let's say if you're trying to pick the best option, 1,332, how many shares can we get? So the calculation I need to do would be 11332 divided by 12. Sorry, I didn't put that there. Can somebody let me know an answer? 1,332 divided by 12. How much does that equal to, guys? Someone tell me. Let me see. 9433 recurring. Okay. So 9433 recurring sounds about. So we can get, let me see. Let me copy this. So for if we were to spend this amount of money, 1,332, we'll have how many shares? Um, I don't know. This number seems a bit high. Maybe it's 94. I think maybe I forgot to say divide by 1,000. Let me quickly check on my phone just to make sure. Divided by 12. Okay. Okay, 111. Okay, I've got 111 as well. So 111 shares. So we have 111 shares of Barrick Gold. Okay. Now, um, when it comes to stocks and shares, Lizzie asked a very good question. I always love her questions. And she said, when we were making the list of assets, I didn't put stocks or stocks and shares. Now, in a sense, they are assets. Okay. But with when it comes to the assets, because it's based on a company, okay, um, I'll it's still an asset in a sense, but I was finding it hard to answer the question to say why. So let's just say we're thinking about assets, and the type of asset we're going for today, or what I'm talking about, is assets as a store of value to protect us from currency devaluation. Okay, yes, we'll make profit from it too, but we're looking for assets that have a store of value. So if it's Bitcoin or e-gold, Elron, cryptos, or if you're going on the silver, gold, things that have intrinsic demand all the time. Now with shares, the reason why it's a bit of a gray area is because with shares you can split a stock and you can double the amount of shares. You can increase the number of shares at any time in a company. So I find it very hard to call them an asset. In a sense, they are because they do. If you put money into the system, you'll get money out, and usually more if you invest correctly. With a but when we're doing this like for like strategy, what we want to do is that if we had to choose between the two, if we grabbed 111 shares, okay, let's do the price comparison now. So during the period of time, now this specific period of time, the reason why I have it marked out because this is the last cycle of the financial crash. Now we've just come out, well, we haven't come out, but we've just been in the last financial crash of 2020 because of COVID. All right. But from 2008 to 2011, whenever you're picking mining stocks, or if you're looking at junior mining stocks, which I'll get into later on, one of the things you want to look at is how sensitive the currency is to gold or to the underlying asset that they're mining. Okay. Because if the price isn't so sensitive or you don't see a strong correlation, then it might not actually be a good thing. Okay. For the company itself and for gold, because it means probably that they're not getting gold in as they should, or they don't get enough sales on gold, or in that system there's something broken. Okay, if they're very sensitive to gold, then you should see very similar spikes that you would see on the gold price to, for example, Barrick Gold. And there's others too, but I'm using Barrick Gold because we done it last week. All right, so let's see if I can get XAU USD. So XAU USD. All right, I don't know which one I use. I don't know if it was Owando or whichever I did use, but let's just pull that up. So whilst that's loading, guys, when we're looking at this like-for-like strategy, okay, we have a few things. Now, to make profit on gold, 20%, and I'll explain what I mean. So whilst we're waiting for this to load up, however long that's going to take, let's come back here. So we have 111 shares. Now, if the price gets to where it is right now, $38, let's say it gets to $40, then you're going to have double the money you put into the system. Now, with the like-for-like strategy, what you're trying to do is you're trying to find the indirect way to get into the asset. You know, in this case, Barrick Gold is very highly correlated to the gold US dollar, and you'll see in a moment, okay, because of it's a mining company for gold, especially. So you would see sometimes when you get into something like, for example, a share or get stocks or get shares of a stock. Okay, the terminology I always mess it up, but I think you guys know what I mean. With the like for like strategy, what we're trying to do here is we're trying to indirectly get into gold, which is the true asset, which is a store of value for the future, by using another type of asset to get there. That's what the like for like strategy is in simple terms. Now, because the barrier to entry is a lot lower, because at least you can get, shares at maybe, for example, for us in the UK, that would be about £12. Okay. But roughly around something like that, it's quite easy for us to get um, access to this, share at this price. Now, the aim that we want to do is we want to get some nominal profit. Okay. So this is the key. I didn't write this yesterday, but let me write this here for you. Okay. Now, guys, keep your eyes on the price. If you look at pound CAD, you keep your eyes on it afterwards. If you haven't done it already, just a second reminder if you forgot. All right. So if we do this, let's go back now. So if I said to you, one piece of gold, so let's say we have 1,332, and that equals to 111 with the shares. Okay. If the price goes up from where it is right now, so $20.31, and we get exit out at $40, or the price gets to $40.62, then we made 100% profit. Okay, equals to 100% profit. All right, and I'm going to put here 100% nominal profit. Okay, because the profit you're going to get back with this system, if you put money in to the system, you get money back out. So that's how the system is, because if you put dollars in, you get dollars out. If you put pounds in, you get pounds out. You have a representation of that money in the form of a share of a stock. Okay, now when we're looking at the asset in the sense of when we're looking at gold, we know that gold itself will always have an increase in demand forever, because for every 1 billion, for every 1 billion particles on the Earth's crust, there's only 3 particles of gold. So the scarcity element is always there. Now with these shares, we don't know whether the shares are going to split, or the stock is going to split its shares, and which is good, price positive in some cases. If they're going to increase their shares, that might not be so good, possibly. It depends on how it's done, okay, how they do it. But with this system, the thing is that with shares, the value can be changed by a man-made party. You can just decide, okay, we want 1 million shares instead of 2 million, or we want 3 million shares instead of 500,000. Okay, so in that system there, theoretically, there's no cap to what the supply can be, and because there's no theoretical cap to the supply, this is why I find it hard to call stocks and shares assets, because an asset needs to one of the key things it needs to have for it to be an asset, it needs to be able to be not necessarily just a store of value, but it needs to have a limited supply. So that means it has a definite scarcity, so if everybody can have it possibly, then it's not a good thing. Okay, which is not what we want. Okay, we want something that is limited in its supply. So if you have one, it's a rarity, and then that will be price positive, and also more money will go into the system because people are going to pay more and more for the same thing. Okay, so this is the nominal strategy of like for like. So let's say now if we look at this period here, let's say we have June 2007 to 2012. All you want to do when you're looking at assets, you can do this for silver. If there's a company that's focused on silver, same thing. So here is silver. Let's do that. Um, Now I still have the parabolics that I've written all those. Can you imagine, guys? Who remembers this lesson? We have the parabolic teaching from I don't know how many months back is still here. So cool. But let's just look at the period of time. I'm going to put it on myself. Get some vertical lines going. Is everybody cool so far? I hope you don't feel like I'm rambling on. I just really want to give you something good. So I'm trying to slow down and break it down and give you something that can help all of you. So everybody good. If you have some questions, but you feel like you don't want to interrupt me, please feel free. Yeah, all good. All right. Let's put this here. Let me delete this. All right. So I'm going to put these two right here. Let's look at between, sorry, 2007 to 2012. So throughout the same period, okay, one of the things you want to see is the percentage gain. So I guess if you had put 800 and if you had bought 1 troy ounce of gold at 867 and the price got to the all-time high of 191, it was the all-time high is 121.20. All right. So we have about 100x within this same 5 period. The only thing is that nominally speaking, you would have to have a high amount of money to get a higher amount of money. Whereas you can say make this same 100% profit if you were just saying we're holding it over this long period of time. This is just an example. All right. There are many other ways to get money in terms of profit quicker than that, but we're just going for a simple example. But let's say during the same period from 2008 roughly to around 2012, you can see that the price is very sensitive. Whatever happened here during this last financial crash, whenever there's a financial crash, you know what people do, or the rich people do, okay, which is we're going to put our money into something that can save us from currency devaluation, for example, gold, and hedge their wealth in there so that they don't lose the value of their wealth through currency from the currency situation. So you can see during the same period, the price was very sensitive to that, and we see an increase in demand for gold and therefore increased mining, which will mean increased price and increased profit for the company. So if we were to wait for the same period of time here, we could have made, now let's calculate this. If we got in at the bottom, this is saying that we got in at the bottom. So $17.31. All right, let me mark this out so I can be a bit more clear about this. Put some numbers in so that you can start to do the maths and start to work out your gameplay of what you want to do. Now remember, assets have different plays to them. There's some assets that you're going to hold and leave, and they're only going to be used as a store of protecting your wealth or protecting your family, your posterity. And then there's going to be other forms of wealth or other forms of asset you have, you know, as a foundation, which is once you want to generate the currency of the day. Let's say, you know, for us in the UK, the pound becomes very weak to the point that for every pound you have is worth about 10p. Okay. No matter what, if they change the pound and we don't have the pound anymore, and let's say that the new currency we have is, I don't know, let's make it up. We have the tree. Okay. So, we have the tree, which is our new currency. So 5 tree probably equals to maybe £1. All right. It doesn't matter if it's trees as currency or whether we use, I don't know, sticks to represent money, which or to represent currency, it doesn't matter. But if you have the asset, it will generate the currency of the day. So that's the foundation strategy. And on top of that, you can build different ways that you're gonna do it. You're gonna have hold on to it that you know, you're never gonna sell. You're just gonna continue to hold on to it, and other things. But instead of me rambling on, just throwing that knowledge out there so that you can start to plan. So we want to get the highest point. Now, this is assuming that we catch it at the highest point. So here's $55. Okay. Let's just call it 55.86. All right. So I'm going to grab my calculator out. So let's look at the nominal percentage. So if we're going to say our percentage gain, all right, during this same period where we had to hold gold, which was more expensive, all right, how much would we have made? So simple calculation, 55.86 divided by 17.46, and we have this. Let's see. I'm going to do it. 55.86 divided by 17.46. So we have 319. Okay. So we would have made In other words, a 3x or 3.2x. Let's just call it 3.2. Let's just keep it as it is. 3.19. Okay, so 3.19x return on investment, ROI, which means let's just assume we're using the price of gold today for the past. Now I put RO1. Don't know why I did that. ROI. There we go. So if you look at the ROI for what we have here, if I put this calculation here, so in that same period of time, let's assume that, in our hypothetical example, we've spent 1,332. So 1,332 times 3.19. So the magic number we get is 1,332 times 3.19. So the new balance we're going to have is 4,249. So if we deduct our initial investment from here, so gross ROI, so the gross ROI that we're going to have here equals to 4249.08 divide, 4.49.08 minus 1,332. All right, so the profit we have is 917. So this is our growth that we've had in the profit, okay? This is if we were to take the stock version of this period of time. This is an economic crash, just like we've had one now. So prices were low at one point and then they become very, very high, which is going to happen again because, as I said, currency devaluation is on its way. After all the stimulus pans out, as I said, the stimulus and all of the different measures of quantitative easing are just short-term solutions for an intrinsically broken system. And so when that happens, we're going to have the next cycle where everybody's going to want to put their money into gold to protect themselves from currency devaluation. So the point right now, the reason why we see that the price of gold is weakening in other videos as I've taught, okay, this is purposeful manipulation to discourage people from getting into gold, but they're kind of trapped because for the smart ones, it means we have a cheaper gold price, so let's buy more. But for others, it might, put them off and they might not want to do such a thing. All right. Now let's use the same thing. Let's talk about where the price was from that low. So I'm using pounds, let's just use dollars. So I think it was about 868. Okay, this was the low point. So this was the low of the gold chart itself, and the high was 1921.20. That was the high. So if we go for ROI, it's going to equal to 1921.20 divided by 868. 868, which is equal to, so 1921.868. So this is the maths you do have to do. So 1921 divided by 868. So silence. So we have 2.21. Okay, so we have 2.21 ROI, which is not bad at all. All right, not bad at all. But you can see already it's not as much as what we would have had if we got into the stock version of it. Now, it's not because we want the stock necessarily. May want to have some because it doesn't mean it's not a bad investment at all. But then what we see here is if we do the return, so if we say, let's say theoretically we spent the same money, so 1,332 times by 2.21, take away the initial investment, what do we get? So times that by 1,332. 1,332 times 2.21, take away 1,332. We have 1611.72. Oops, didn't put the point, 0.72. So you can see right here, we have almost double the amount of profit from putting money into the stock versus putting money into gold itself. Now with this profit, you can either liquidate everything or you choose what you want to do, and you can use the profits nominally. So now you've got the best exchange because now you can take the currency profit, so the 1-for-1 currency for currency, and now you can get to the next level where you put currency for asset, which is the greatest exchange. So this is a way you can get into gold without being into gold if you don't have much money to start. Okay, and even though yes, you would have made profit, The end goal for holding gold and silver is as a store of value, really, especially for gold. Silver has more use case in, as I spoke about, with solar panels, things like that. So this is the like for like strategy as a foundation. So when you're looking for assets, this is what you want to do. Okay. And here's the recap of, if I have it on the side here, this is what we're going to look at when you're working these things out. So drag this up here. What have I done? So we want to look at financial crashes and financial booms. Now, why I'm talking about this, especially in 2021, is because this is where we are at the moment. We've just had a situation similar to this, and the price of gold is soon going to take off. So if you don't have much money, then you might want to look into the shares. Now, for legal reasons, this does not account to financial advice, but this is just from my own suggestion. Now, from what we teach in the academy about price action, you can see here this all of the features of price, the price cap, the return to the price cap into demand. And this looks like it's about to take off, to be fair. We have a liquidity gap, we have some triple highs, we have a whole lot of things here. All right. Now you have to think about it. The price will one day have to continue to go long on mining stocks. I think mining stocks probably are going to be one of the stocks that survive no matter what and will thrive because what their product that they're providing has a limited um, has a limited supply to it. Okay, that we kind of have a picture of what it roughly is. All right, so that means that these companies will always gain value because more and more people will be running. The demand for gold will be higher. The demand for silver, and etc. So this is one of the ways to do it. And are there any questions? And I'm going to leave you with maybe a few tips for 5 minutes, and then we'll call it a session. Are there any any questions at all? If you're all good, everybody type yes. Let me continue. All right. I'm going to do one more thing. Look at another company, and then we can call it a session. All right. I'm going to assume there's no questions. Okay. Thank you for being honest. Okay. No worries. All right. So let's look about picking some opportunities now. So when we're looking at picking opportunities, I'm going to go down the road today, mainly of talking about assets as stores of value, okay, for the sense of protecting from currency devaluation. All right. Now we have this like for like strategy, okay, between stocks and assets like silver and gold. We can continue to use them. So let's switch the script a little bit and let's look at this. So whenever you want to find these things now, when you're looking at the prices, of course, you do have to look at the company. And last week I laid out some things you want to look at for the company, because although, we're primarily looking at the comparison between gold and the company, because the company's got people involved in it. Okay, there's going to be fundamentals that drive the price of the company, which don't exist with gold. Okay, and so you do need to do some due diligence there and look at the company, look at the earnings figures and things like that. Are they operating in, high debts, or what's happening there? Things like that is what you need to look at. Okay. So what I'm going to do is I'm going to bring out another type of asset for investing, and I'm going to introduce this. We're going to do a bit of cryptos. So let me get rid of this chart. All right. And I'm going to bring out Bitcoin. All right. We're still talking about assets, and I'm talking about ones for store of value. So Bitcoin USD. Let me grab it on any place. We can use Binance. It doesn't matter. I trust Binance, so that's fine. All right. I think the only problem here is that we're buying. The price is just, it hasn't got enough history. We need something with, I think maybe Coinbase has been around since 2013, so it should give us here. All right. So I'm going to pull up Bitcoin, and let's just talk about this for 5 minutes. So a lot of people ask the question, okay, and I understand, all right, when it comes to cryptocurrency, it's still sometimes a gray area to some, all right, but really Bitcoin is something that is important and is going to change everybody's life. I think the whole cryptocurrency market, and this is what usually happens, guys. Right now we're in a revolution, okay, we're in another revolution after the one that we've had when it comes to the internet, okay, which has changed our lives forever, and nobody ever believed it. It was kind of a scoffing confiscate. It was, if you were an internet person, you're a weirdo in the 90s. Even though I was born in 94, but growing up, I remember for me when I heard of internet, if I wanted to use the internet, I couldn't use the phone at the same time. For those of you who can remember that, if you're old enough or young enough to remember that, but there was a time where if you wanted to use the internet, it was called dial-up connection. If you tried to use the phone while you're on the internet, you used to hear of these crazy sounds like proper robotics. Sounded so amusing to me, but I can still remember it up till today, being with AOL, one of the internet providers in the early days. So during that during that period of time, madness. Exactly, I remember that. Absolute madness. And things have changed a lot from then. Now you can get internet on your phone. There's Wi-Fi boxes. Now you get a SIM card and create your own Wi-Fi box. I remember when the Wi-Fi box first came out, and I was so happy. But you can see that there's more development going forward in the industry of the internet, and it's going to continue. Right now, the structure of the internet is something that's here to stay, and without the internet, human life actually cannot continue. And it's the same with cryptocurrency. Even though we're seeing crazy prices with Bitcoin, I think we haven't seen anything yet really. But the reason for it is for more reasons than just because crypto is going to take center, be the next layer of human. For me, I see it this seriously that cryptocurrency as a whole is the next layer of human evolution, if you want to put it that, in the advancement of human life. This is the next layer of foundation. At the moment, it's still an issue where everybody thinks it's a scam. I think only 5% of the world are involved in crypto in any way. Most people are still you know in the dark completely about it. Some people actually didn't know what Bitcoin was until it got to 40K, let alone even when it got to 20K. So I can assure you guys that there is still a lot of room in this space, and we'll be talking a lot more about it. But let's talk about Bitcoin. Now, Bitcoin is, I always consider it to be a digital gold. And if you've heard that term digital gold, here is why. So one of the aspects of Bitcoin, how we doing for time, that are important to remember is that intrinsically Bitcoin only has 21 million coins. Now, these 21 million coins were designed by Satoshi Nakamoto. Now, for some of you will know this. So Satoshi, have I got it right? Satoshi. Sorry if I spelled your name wrong, Mr. Satoshi, but Satoshi Nakamoto. But I'm not really going, the founder, yes, we know him, or some of you have heard of him, Satoshi Nakamoto. I think he's going to fix it for me. Okay, maybe not. All right. So 21 million coins, okay, and this is fixed. Okay, there will never be more than 21 million coins. Now, because this is fixed, I'll come back to the name. All right, what does this mean? We have a limited supply. Okay, and this is one of the largest, okay, scarcity factor. All right. Now, because of this scarcity factor, all right, and this is really going to be opening the door to help you guys with crypto as we talk about investing more. There's 21 million coins, and this is fixed. It's been coded in the system that after 21 million, no more Bitcoin will exist. Okay. So because there's 21 million, now think about this, there's 21 million Bitcoin and there's approximately 7.2 billion people in the world. All right. At the moment, people still don't know about Bitcoin. And to be fair, the price is uh, still very high to get into. However, one of the biggest and the most important things that you have to keep in your mind is that Bitcoin, okay, is a store of value. Okay, so I'm going to write this here, a store of value. Okay, now I'm going to get Satoshi Nakamoto to be removed here for a moment. So Bitcoin, 21 million. So it's fixed, just like how gold has a fixed supply or fixed theoretical supply. All right. We have limited, so that limited supply produces a scarcity factor. Okay. And is used as a store of value to store money in. Now, why does this system work when it comes to Bitcoin? Because of this scarcity, okay, there are a few things. I will discuss this in more detail, but we have the Bitcoin halving, which is one section of it. So Bitcoin halving, okay, is to do with the technology of Bitcoin. Okay. I'll put this here. This is one reason, and I'll leave this here for a moment. That's one aspect. All right. But if we break this down in pieces, let's just go through the first thing. So to make it quick, Bitcoin technology, what is it about? So the Bitcoin technology, to put it into a simple way that we can all take some notes from and remember. First things first, with the Bitcoin technology, it was created, okay, uh, as a peer-to-peer payment system, or P2P, all right, peer-to-peer payment system, okay, system of payment. Now, this is important, okay. It was designed, okay, when it was designed is very important, but it was designed, okay, to overcome the issues with a centralized, which is still currently centralized, but is becoming more decentralized, but with a centralized economic system. Okay. Now, three, when it was made or it was created or theorized in 2008. Let me put it right here. So, theorized in 2008, okay, listed in 2009, okay. So this is what we have. These are the three major things. Now with the Bitcoin technology as a peer-to-peer system, what the key here, what makes it an asset, okay? I'm coming from a different angle, is that fiat currency goes in to the system in exchange for the currency for Bit for I just put for BTC, which is the ticker name, or Bitcoin for sure. So fiat money goes into this system. Now, because there's only 21 million, every time somebody buys this coin, the demand goes up and the supply goes down. And because the demand goes up and the supply goes down every single time, then the, in theory, which we can see the theory playing out in practicality, the price should always increase. Okay. And what this means is that because this system goes in this way, all right, I'm going to put this point here so you can have some points to remember. Every time it is bought, all right, demand increases and supply permanently. This is important. Permanently. Um, so I think I spelled that completely wrong. Decreases. I'll fix that. Permanently decreases. Okay. So when somebody buys a piece of Bitcoin, assuming that nobody sells it, every time they've bought it, that coin will never be in circulation or existence again. Okay, that person owns that piece. So that piece is there, is being owned. Now, this beautiful thing that Satoshi Nakamoto made. Now, for those of you who know, Satoshi Nakamoto, whether he's a person or group of people, is still unknown till today. And the reason being why he's hidden himself is because he stepped on the toes of central banks and many of the institutions that are not for the people, okay, namely governmental infrastructure, which is for another day. But what he's done is that he's broken past and made it possible for people to be able to exchange value around the world without the need of a centralized system. And also, the actual asset they have or the money they have is actually backed by something. In this case, is backed by the supply and demand. So the backing of this system is in the fact that this system increasingly, okay, so I put it here, increasing decrease in supply. Okay, so we have an increasing decrease in supply, or I have to put that here. So what a tongue twister. Increasing, decreasing, increasing, decrease in supply. All right. So the supply keeps on dropping as people buy, which is what we need. Now, because new coins can't be created, all right, in theory, economic theory, the price will continue to go up. Now, it's theory and also math is also maths. If you have, if you buy more of something, and there'll be less of it, and if you can't create more, then it's going to become scarcer and scarcer and scarcer. And so this is why the system created that Satoshi Nakamoto has, created is really valuable and highly important. Now, it was made in 2008 or released in 2008 in the, in the midst of the financial crash, which is perfect timing. And at the time, you have to understand that, as I've talked about many times, that financial crash really put into perspective how how flimsy currency is, and that is just literally paper. Okay, that is the government tells you what or how much value it has, determined by figures made by a few PhDs between behind a room somewhere. Okay, and this is why he wanted to end that monopoly and create something like this. Now, after what he's created, there's been many more different what we would be called cryptocurrencies. The word crypto because the technology is crypto, is cryptography, and then the currency is the currency of that system, or the representation of that system. So cryptocurrency. Okay, born from BTC. All right. Now I'm gonna go another one for this is another way of you can use the like for like strategy. I try to be as quick as I can. But when we look at this, all right, from the system we have here, Bitcoin acts as how money should be, and specifically acts like gold. With gold, okay, even though the price is rising over time steadily, the reason why the price of gold is rising is because less and less of it is in supply and is demanded for more, which is the foundations of what money should be. Okay, and because Bitcoin has the same kind of characteristics, we consider it to be digital gold. Now, right now the price is 57,000. So the question is there a way that I can still get into Bitcoin without getting into Bitcoin? And the truth is yes. And the way you can do that, I've been wanting to teach this for weeks, but I wanted to lay good foundations for students, for those of you in the world who don't know, or even if you do know, but it's a very good refresher, is what we call altcoins. Okay. Alt or alternative coins. Okay. Let's get rid of that. So these alternative coins, or what we call altcoins, are are cryptocurrencies which have technology. They don't have to be exactly what Bitcoin does. Now, there's many different pieces of techno or different things that cryptocurrencies do. Some focus on, if you think about it, they're in a way, diverse ways for human life to be bettered. So there's some coins that are responsible for, let's say, how we deal with betting. If you're somebody that does bets, or you're a professional poker player, there's cryptocurrencies for that. If you're in the gaming industry and you want to be able to exchange value within a gaming system, if you want to have privacy, there's coins for those. There's so many different coins or tokens for different areas of human life, in a that can apply or have use cases, as we call them, for modern day life. Now, altcoins, okay, are spring up almost every day now, okay, and you can get access to these coins at very cheap prices. Now, if you want to know another like for like strategy, you can use altcoins to get yourself into Bitcoin. Okay, the same way you can use Barrick Gold, for example, in this case, to get into gold. Okay, because the barrier to entry is high. If you wanted to own one whole Bitcoin, all right, it's going to cost you 57,000 right now. 57,000, let's call it $900, okay, to get one coin. Now, with that same 57,900, you could put that money into altcoins and make a very handsome return nominally, and you can put that the profits back into Bitcoin, so you still have a store of value. Okay, so altcoins, all right, and I'm going to put this here. Okay, varied um, technology product projects, okay, based on cryptographic technology. Okay, and designed, I'll write this here, to solve human problems. Okay, using what we call using technology based on blockchain technology. Okay, so blockchain, guys, all right, comes from what we call distributed ledgers. Now, I'm only doing the foundation for this lesson. Next week, I'm going to go heavy on this, all right? But we can use the same picture with Bitcoin and altcoins, because altcoins, all right, are coins that are a lot cheaper. Some are, 20 cents, 30 cents, which have price potential in the future that you can put money into and get, high returns on investment, and you can put that money back into the system so that you still have your store of value, you still have the picture of what we're talking about here, which is, for example, in this case, protecting your wealth. Okay. Now, with these projects, okay, or what we're looking for, is there any way I can make some more space here? All right, drag this along. So let me put this here for you guys. So we have this. So if I gave you an example, all right, let's think of a good example off the top of my head. Um, all right. So if I listed some for you, let's say Monero. All right, I just picking one off the top of my head. The ticker is XMO. Now Monero, what it does is a privacy token. Okay, because that's one issue in human life, privacy, and the privacy token, okay, has its own runs on blockchain technology in this case. All right. Now the blockchain technology, okay, is the technology for, or how the technology or the system runs. Okay. Now different chains, okay, we call them chains, and I explain why in just a quick moment, have different ways they behave. Okay, so the overarching theme or the overarching name for these groups of technology is what we call distributed ledgers. Okay, distributed ledgers. Now I feel myself wanting to say so much, but I know that because of time, I can't go and do all of it. Technology, okay, or what we call DLTs. Okay, now there are different types. So we have blockchain, and all this is talking about. So blockchain is just the topology of the system. In other words, information is stored on blocks. Okay, data blocks. I'll put here, which are linked together to produce a system of information. Okay, for use in various activities. All right. So this is blockchain technology, but this is not the only type. Okay. Like one project that I'm heavily invested into is, for example, Hedera Hashgraph. Now, Hedera Hashgraph uses what we call hashgraph technology. Okay. And what it has, without going into deep detail, okay, it has a certain type of cryptography that it uses in order for it to run its systems. All right. It has what we call, I'll say it so that if you want to go and search it up, you can, but it's an acyclic Byzantine system, fault tolerant system, which is a type of coding that I'm very deeply into writing because it's a very good way to be able to run things. But we have Hedera Hashgraph, for example, and it uses hashgraph technology, e.g. Hedera Hashgraph. All right. There are different types of, these are just a few. We have hashgraphs, we have blockchains, and there is more. Okay, we'll go through some more later on. But let's just talk about these two for a moment. So the topology of the system is what makes a cryptocurrency, whether it's a blockchain or a hash graph. Okay, I think the blockchain name is very popular, but hash graphs and things like that are not so known. Okay, but the distributed ledger technology is the foundation of it. Okay, and Satoshi Nakamoto, what he designed here is to create a system where there isn't any chance for people to not know what's going on in the system. At the moment, centralized organizations have all the control and the people suffer to whatever they change things to do. And this is what we saw 2008, as I said, during that crash. The private sector got leveraged out, they got saved, or they got saved from the messes that they actually created from their, greed of doing what they did with subprime mortgages, but the people suffered. And so when the quantitative easing came in to kind of bring some refresh into the system, it was all given to the private sector and the public was left to kind of lick their wounds. Whereas now in 2020, 2021, because we have a global issue, okay, it was a global issue in 2008, but because the global issue has a different tone to it, all right, quantitative easing, both the private sector and the public have both received the benefits of what we so call stimulus. Now you keep hearing stimulus everywhere. This is what it basically means. They've printed more money, so they've printed out more debt to help people. Okay, or short term. All right. So that difference in the system, okay, from 2008, all right, when he made Bitcoin, he had in mind of seeing the future that this can definitely happen again. And 2008 was just a screenshot of what can happen, or just a snippet, I should say, of what can happen in the 2020s, 2030s, and beyond. And so it's important that we discuss this topic, and we will be talking about this more. So how can we end off here? So all of these different altcoins or alternative coins have different purposes. Some of them may be the same as Bitcoin but better, but they're just alternatives to Bitcoin. Okay, so there are similar projects that are like Bitcoin technology, um, that have payment system in place. I can say, for example, let's talk about one, uh, a good one. Uh, we have Ripple, XRP. So Ripple, okay, has is one type. Okay, it's a payment system. All right, and I think the price is currently about 44 cents, 0.44 cents for one of them. All right, all right. With now one great thing I want to say to you guys as I talk about cryptocurrency more in the future, and the guys come on and talk to, um, because we're in the first, I would say, 10 years, or in the early stages, early development, the potential, now this is not financial advice, but this is just from what I've seen, that the potential to make massive ROI and potential is right now, because we're in the young days. It's just kind of like, and I'll show you an example. If you were to buy Apple stock in 1982 all the way up to like the dot-com crash and the dot-com bubble and crash, those were some of the cheapest prices. I think at one time you could buy one stock of Apple for about $3 or $2, and now today I think it's about $2,000. Okay, many years later, 10, 20 years later. So it's the same kind of thing when it comes to crypto. We're in the early stages where we're seeing sense for these very important pieces of technology, which will make up you know very different, but together will make up very crucial and integral parts of our system as human life. Okay, I'll give you another one, XLM. All right, the founders, one of the founder of XLM is a co-founder of XRP, and this is for Stellar. Okay, and I think it's roughly around 41 cents. Okay, so you can see the prices are very low. The barrier to entry is very low. This is not my suggestions of entry of what we're going to buy. Another one is Cello. Okay, it's another good one. I think Cello's around about $3, right? $5 actually, $3 to $5. I'm not too sure. Let's just call it $4, and etc. Okay, then you have some which are for gaming. So if I put gaming out here, we have Engine Coin, which has done some amazing returns. Engine Coin, when I saw it, was about 18 cents, and right now is $1.66. All right, so already it's done some massive gains today, roughly around today, and I think in 2021, so January 2021, it was around about 18 cents. Okay, what's another one? We have Decentraland, which is Mana. Decentraland, the ticker is Mana, and that's done quite well as well. I forgot the price of it, but it was roughly around about 0.02 cents in 2020. I think it's about 23 cents right now. And over that same period, without doing the calculations, I'll continue with it next week. I'm just trying to put as much as I can in there for time. During that same period, if we talk about January 2021, all right, if I look at the price of Bitcoin right now, if we did some calculation, I'm going to do a quick one for you, and then I'll continue because I'm really thinking about the time. So let's say the current price is, let's say, 57,780, and from the prices that these were at to where it is now, we'll divide this by 30. It was, so right here, this is January, or February, sorry. So January is here, 28,000. So 28,000. Let's see, 28,000. Oh, 27,000. Sorry, 827. All right, I'll just make it 828 to round it. All right, if I do the maths on that quickly, 57780 divided by, 57780 divided by 27828 equals to 2. So we have basically a ROI, so 2x. So whatever you put into Bitcoin at that time, you have 2 times your money. And I think you guys can already see, this is for BTC, but you guys can already see, if we did a calculation with just these ones here, Engine Coin, let me grab something here. I'll quickly do this for you guys just to see what's going on. So 166 divided by 0.18, we have an ROI of, so 166 divided by 0.18. We have a 9% times 9 return, so 9.2x return. And for this is for engine coin, let's say. And then dollars for the next one. Decentraland, we have 0.23 cents. It might even be higher than that. I don't have, if you want to look at these coins, by the way, for those of you who are not too sure, you can go to coinmarketcap.com. It shows you where all of these coins are. I might quickly pull it up to make you guys see what that looks like, divided by 0.02. And we have 11.5x, okay? And this is for Decentraland, all right? So these are just a few gaming tokens, for example, which gaming is a big industry. You know, it is increasingly more gamers, which means more money in the system. So here's Engine Coin, here's the returns, and here's the other one. If I compare them, you can see during the same period from January to now, this has made 2x on Bitcoin. But at the same time, if you put the same amount of money into Engine Coin or even into this one, if you put £1,000 in, you would have had 11.5 grand. In this one, you would have had, let's bring it up a bit higher over here. You would have had 9.2 grand for £1,000, and over here you would have had 2,000. So you can see sometimes for you to get to where you want to be now with this 11 grand, you can put some money back into the Bitcoin system and have, or I shouldn't call it system, but put some money back into the Bitcoin economy. That's the better term, and take the rest of the profit and diversify again, and also get some more profit out of that for you to keep for the future and move forward. So you can see in this industry, the reason, as I said, the reason why the gap is so big between the Bitcoin, which is the foundation to these altcoins, is for the reason of where we are in history. In 10 years' time, these returns won't exist. I mean, there will be companies springing up. Like, for example, if you think about stocks, Apple's and IBM, things like that have been around for a very long time in the 90s and even in the 80s. But then Facebook came along, which is another form, and it's done massive returns on investment. Okay, even in the 2000s. So there will be a few companies that will make major returns, but in this period of time right now, everything is up. There's a lot of opportunity up for grabs. Now I'll be sharing my list of coins for students with you guys, and on the email list for the newsletter, I think I'll be sharing a few coins that you guys can have a look at to see what you can pick from it that you like. Now I'm trying to use my words carefully because I don't want to try to suggest a certain coin to you or something. I'll just share what my thoughts are and you guys can let me know what's going on. But students, I'll make sure we do in detail breakdowns and stuff about these things. So you can see here the difference here. So in the like-for-like strategy, if you really want Bitcoin, you want to go for the cryptos and then take your profit from the cryptos and put it back into the Bitcoin. That's the end goal, okay? So that you can have a store of value and something that is going to consistently, increase in value and over time will become deflationary. Now, the deflationary mechanism for this, because of time, I can't go through it because I think I've gone over time by quite a bit. But at the same time, I hope you guys have picked up something from this. Are there any questions at all? Okay. I promised myself I wouldn't take so long, but I think I have. But I really do hope you guys have enjoyed that. Are there any questions at all? I promised I will do more on this, as I said, and put more detail in, but I've left a lot of the details out so that I don't have to go down the rabbit hole of more teaching so that I can let you guys get some rest. If there's no questions, please type no, let me know, and then we can call it the end of the session. Today was brilliant. Thank you. Oh, no worries. Thank you very much, Marlon. All right. So Marlon says it's brilliant. Appreciate. Um, I hope you guys enjoyed. Okay. What I'll do, I end the session. All right. This will be available on YouTube in a few days' time, guys. Stuff. So you guys can take care. Have a great session of sleep. Okay. Or studying, whichever you're going to do. And I'll catch you guys later. Take care, guys.